Yesterday, Mixcoin shocked investors with a sudden 32% plunge, erasing weeks of gains in just hours. This wasn't a minor dip, it was a full-blown crash that sent panic through the community. In crypto, double-digit swings are common, but this drop was especially brutal, triggering a wave of panic, selling. The suddenness left everyone scrambling for answers. Was it a whale dumping, hidden bad news, or just the market correcting itself? At Crypto Insider, we dig into the data to separate fact from fear. Today, we'll break down what caused Mixcoin's wild ride, looking at technicals, sentiment, and the bigger economic picture. By the end, you'll understand why Mixcoin crashed and what to watch for next. This isn't about predicting the future, but about making sense of the chaos. Let's dive in. A 32% drop in a single day isn't just a bad day at the office, it's a full-blown crash by any standard, and in the world of crypto, it's even more dramatic. Such a steep decline sends shockwaves through the market, shaking the confidence of even seasoned investors and making headlines around the world. It signals a sudden shift. Sellers overwhelm buyers and prices freefall until new buyers step in to catch the falling knife. Panic selling can take over, and the market can feel chaotic and unpredictable. Imagine you're at a concert and the main act cancels at the last minute. Everyone rushes to sell their tickets and prices collapse instantly. The value of something can evaporate in moments when sentiment turns. That's exactly what happened to Mixcoin. A massive, sudden shift in sentiment triggered a rapid repricing, leaving many investors stunned and scrambling to react. In crypto, volatility is the norm. A few big sellers, so-called whales, can move the market dramatically, causing prices to swing wildly in a matter of minutes. For investors, this is the risk-reward trade-off. The potential for big gains comes hand in hand with the possibility of sharp, sudden losses. It's a roller coaster ride that's not for the faint of heart, but a crash doesn't always mean the project is doomed. Often, it's just market mechanics and psychology at work. Fear, uncertainty, and herd behavior can drive prices down far below their true value. These events act as stress tests for both the coin and your investment strategy, revealing weaknesses and testing your resolve as an investor. The key is to analyze, not panic. Take a step back, review the fundamentals, and avoid making emotional decisions in the heat of the moment. By understanding the dynamics behind these sharp moves, you'll be better prepared for the next wild swing, and more confident in your decisions. So, what exactly triggered Mixcoin's plunge? Let's break down the events that set off this dramatic fall. What caused Mixcoin's dramatic sell-off? Usually it's a mix of factors. First, profit-taking. Early investors cash out after big gains, overwhelming buyers and pushing prices down. Then, forced liquidations. Leveraged traders get wiped out as prices fall, triggering a cascade of automatic selling. This domino effect, called a long squeeze, can turn a small dip into a full-blown crash. Broader market trends matter too. If Bitcoin drops, altcoins like Mixcoin often follow. Sometimes it's specific news or rumors, regulatory threats, security issues, or a key team member leaving. In crypto, even a single tweet can spark panic selling. Mixcoin's drop likely combined profit-taking, market weakness, and maybe some Mixcoin-specific fears. Understanding which factor dominated is key to predicting what happens next. Let's see what the charts reveal. Technical analysts rely on a combination of volume and support levels to decode the anatomy of a crash. These tools help them understand not just what is happening, but why it's happening, offering a window into the collective mindset of the market. Mixcoin's dramatic 32% drop wasn't just a number on a chart, it was accompanied by a massive surge in trading volume. This spike is a telltale sign that panic and conviction were driving the sell-off, as traders rushed to exit their positions, amplifying the downward momentum. When a coin crashes through a key support level, it's more than just a technical event. It signals that the floor has given way, shattering investor confidence and often accelerating the pace of the sell-off, as stop losses are triggered and more sellers join in. This breakdown can trigger what's known as capitulation, where investors, overwhelmed by fear, give up hope and sell at any price. It's the moment when panic peaks and rational decision-making is replaced by emotion. Trader psychology is the invisible hand behind these wild swings. Greed fuels the rally on the way up, while fear takes over on the way down. Emotions can override logic, leading to exaggerated moves in both directions. After a crash, the mood in the market shifts dramatically. Euphoria quickly turns to extreme fear, making buyers hesitant to step in, and sellers desperate to get out. often at a loss. This emotional whiplash can paralyze even experienced traders. This fear can become self-fulfilling, as each new wave of selling triggers more panic, causing prices to fall even further and deepening the crisis. Breaking this vicious cycle requires either a powerful catalyst, like positive news or intervention, or simply time, allowing the market to stabilize and emotions to cool. Understanding these psychological forces isn't just helpful, it's essential for anyone hoping to survive and thrive in the world of crypto volatility. Recognizing the signs of panic and euphoria can help traders make better decisions. The charts reveal where the panic began, but is Mixcoin's crash an isolated event, or is the entire market under pressure? To find out, let's zoom out and look at the bigger picture. Was Mixcoin's crash unique, or part of a broader altcoin sell-off? If many altcoins dropped, it's likely a market-wide issue, maybe triggered by Bitcoin or macro news. In that case, Mixcoin was just one boat in a stormy sea, and recovery depends on the whole market bouncing back. But, if Mixcoin fell harder than its peers, that points to a Mixcoin-specific problem, like a big holder selling, a token unlock, or negative rumors. As of now, Mixcoin's 32% plunge stands out, even as other altcoins dropped 5% and Subentide and 10%. This suggests both market fear and Mixcoin-specific issues played a role. The path forward depends on whether the team can address these concerns and restore confidence. Let's talk about what happens after the crash. How do you navigate the aftermath? After a crash, the market enters a tense waiting game. Uncertainty hangs in the air as investors and traders alike try to make sense of what just happened. The initial shock can leave even seasoned professionals second-guessing their next move, and the urge to act quickly can be overwhelming. Watch for a dead cat bounce, a brief, deceptive recovery before another drop. These quick rebounds can lure in hopeful buyers, only to disappoint as prices fall again. Recognizing this pattern is crucial to avoid getting caught in another downturn. The real test is finding a new support level, where buyers finally step in with conviction. This is where the market starts to stabilize, and it's often marked by increased trading volume and less dramatic price swings. Identifying this zone can help you plan your next move more confidently. For long-term holders, this is gut check time. Do you still believe in Mixcoin's fundamentals, or has something changed? It's a moment to reflect on your original reasons for investing and whether they still hold true in the current climate. If the project is sound, a crash can be a buying opportunity. Some of the best gains are made by those who buy when others are fearful, provided the fundamentals remain strong. If not, it may be time to cut losses. Protecting your capital is just as important as chasing gains, especially when the outlook is uncertain. For traders, volatility means both risk and opportunity, shorting, bottom fishing, or waiting for a trend reversal. Each approach requires a clear plan and the ability to adapt quickly as conditions change. But this is a high-risk environment. Discipline and risk management are essential. Setting stop losses, sticking to your strategy, and not letting emotions take over can make all the difference. Emotional decisions lead to costly mistakes. Acting out of fear or greed can quickly turn a small loss into a much bigger problem. The aftermath is about patience, analysis, and sticking to your strategy. Take time to review what happened, learn from it, and adjust your approach if needed. Don't let fear dictate your next move. Staying calm and rational is your best defense against market chaos. Let's wrap up with some key takeaways for Mixcoin investors. Remember, every crash is different, but the principles of smart investing remain the same. Here's how to stay smart in turbulent times. Stay informed, manage your risk, and always keep your long-term goals in sight. What should Mixcoin investors do now? Start by separating short-term panic from long-term fundamentals. If the project's core hasn't changed, patience is your best asset. Corrections are normal in crypto. Monitor for updates from the team. Transparency helps rebuild trust. Practice risk management. Never invest more than you can afford to lose, and diversify your portfolio. Volatility is part of the game. Prepare for both big gains and steep drops. Stay informed with reliable sources like Crypto Insider. We don't promise profits, but we do provide clear, unbiased analysis. In crypto, knowledge is survival. Thanks for watching. Stay sharp, and see you next time.